This is Jim Colburn of Commodity Research Group. I'm here with Andy Lebow, also of Commodity Research Group, and we're here to talk about energy markets. To learn more about us, you can check out our website, commodityresearchgroup.com, where we post our podcasts and blog. We would like to thank our friends at EKT Interactive Oil and Gas Training for hosting this podcast. Check out their newsletters, podcasts, and learning modules at ektinteractive.com. This podcast should be construed as market commentary, merely observing economic, political, and market conditions, and is not intended to refer to or endorse any particular trading system, strategy, or recommendation. We are not responsible for trading decisions taken by anyone. Information is not guaranteed to be accurate. This is not an offer to buy or sell any derivative. And it's in the afternoon, August 17th, I'd say about 2:30 Eastern Time. Andy Lebow, this is our first podcast in 2 months. We took a month off, but the market has been coming off, showing some weakness. We're up at $74 in October, and now we're at 66.47 when some folks were expecting us to be much higher by now. What happened?
Well, I think that there are two major factors, and they, of course, Jim, are related. One, of course, is the fundamentals, which we will discuss in details. And second has been flow, order flow. And what we've seen is the liquidation of the big trade for 2021, for at least for the second half of 2021. Big hedge fund positioning for rates to go higher and inflation higher, and crude along with it. We saw net length get up to 425,000 contracts on June 15th, a 23-to-1 ratio of longs to shorts, which is just way off the charts. As of August 10th, that net length got down to 287,000 contracts. So we've seen 140,000 contracts liquidated as the market didn't go up. It went down, contrary to expectations, and it was the classic everybody trying to get out through a tightening exit. Now, if you look at the ratio, I mentioned that 23-to-1. We're now down to 7-to-1. And according to the work that one of our colleagues, Billy Perlman, has done, the 5-year average is around 2.5-to-1. So there still could be some room for the market to liquidate, could liquidate further. And that wouldn't surprise me in the least, Jim, if we saw some further liquidation.
Yeah, it's interesting. I was looking at the August short-term energy outlook put out by the EIA, and in their summary, once again, they write about the heightened uncertainty due to COVID. And you want to just talk about the Delta variant for a second?
Yeah, because why is the exit door narrowed in, and the net length having to liquidate? It's because of a change in perception, a change in sentiment, and that's all due to the Delta variant. The reason I think many of us, myself included, just a few weeks ago, we were looking at balances that showed a really significant drawdown in the second half of 2021, based on rising demand expectations. And now all analysts and traders are furiously trying to figure out what the effect of the Delta variant is going to be on demand. And as we know from the last year and a half, there's an immediate effect on petroleum demand, and in particular transport demand. And of course, if it has an effect on the global growth, that's going that's petrochemical demand and certainly diesel demand. So now the challenge is to figure out, okay, so what's the number? How much is demand going to be down? I think the IEA came out with I think there was 700,000 barrels a day lower in second half. I think Goldman was talking about 1 billion barrels a day. We're looking for right now a third quarter decline of about 700,000 barrels a day in global demand, and that is off around the 98 million barrel a day number. So it's still less than one. Now for fourth quarter, I marked it down only 200,000, but I don't know. I mean, we have to see how
Right.
we have to see how things develop. I mean, certainly there's been restrictions, but probably less than certainly less than last year. But again, I think we have to see how things transpire as we head into the fourth quarter. I feel pretty good about the 700 number, but I could be wrong by anywhere from 500,000 to 1 million barrels a day.
I was going to say by 700.
Or by 700, maybe it'll be up. Well, it's interesting. India demand after they had, I don't know, maybe it's their third wave. You lose count of the waves, but they obviously had a terrible go of it in the spring and early summer. And their demand, it looks like in July, at least gasoline demand was higher than pre-COVID. So they had a nice comeback in India.
I was wondering about we were talking about gasoline demand coming into the summer being pretty good, pretty strong. As people kind of do driving vacations relative to, say, flying vacations, less international travel would keep the jet fuel demand down. Now, is that pretty much still in play? That idea, or is gas demand still pretty robust relative to, say, jet, maybe even diesel?
Yeah, gasoline demand, at least through July. July, I think, is going to come out around 2.4 to 9.4 to 9.5. I think August is going to come pretty close to that. Gasoline demand has been it's come in certainly better than what the EIA had expected, which is no big deal because their number was just ridiculously low for their expects for the summer demand. I think they had a low 9 number for the summer, and I think.
Sorry, I just want to interject. I love the EIA, but looks like their forecast change was one of them was that they lowered OPEC production by 600,000 barrels after after they saw the OPEC meeting, what came out of it, and the market came down. So
right.
I feel bad.
Right. Well, well, first of all, their number was, again, I love the EIA also. I think they do good work. You can't get it. They put out a lot of numbers and a lot of data, and you're not going to get them all right. But that one, they were way off. You could see, I think as soon as they came out, whenever that was, months ago, I was like, what? Where are they getting this from? But
and we always talk about how it's this, we're trying to predict things that are moving around, and since COVID, they're moving around at a rapid rate, and I just wish more forecasters would recognize, even though it's starting to sound like a broken record, they have to realize how hard it is to forecast forward. Many of them come out with the same confidence of days when before all this stuff. So anyway,
it's impossible, Jim.
It's impossible. So
it really is impossible. I mean, as I said, they put out a lot of numbers, and you're not getting any of the, you're not getting all of them right. But they do a pretty. I think they do a good job, and certainly their weeklies are. They're very volatile, but they serve an important function, and they usually get it right. Unfortunately, that petroleum supply monthly comes out months from now. I mean,
It's
this month is for
useless.
months ago. Yeah. So,
Yeah.
but
For us, for what
for
we're
us,
looking at.
they're right for the market. That doesn't do a lot of good.
Yeah, it's
But
too late.
anyway, let's get back to
Yes.
back on subject.
Yes.
The gasoline. I think gasoline demand this summer has been good as advertised. Came in pretty much what we were looking for. And now let's see. As we head into in August, I think it'll be good. And seasonally, gasoline demand usually comes off as we head into September and October as vacations end. But we
So
are seeing improvement in jobs, so that's helping.
yeah. Before we get to jobs, I wondered, what's your take on the refinery response or runs to this gas demand? To me, I just felt like I expected them to come back a little harder than that, and I
Oh, me too.
watch the gas crack go up and up and up.
Oh,
It's
yeah.
finally coming off, but
Yeah,
you know,
but right. Yeah, gasoline stocks have really drawn here this summer, and refiners, they really didn't respond the way I thought they would by producing more gasoline. They were to a certain extent leery about producing too much jet.
right.
And they've kept runs have gone contra seasonally, they've gone down, and we'll see. In September I think they may be stronger. The margins have been good. I mean, Gulf Coast margins are really good, so I think September runs will be maybe higher than originally forecast, and then in October we go into turnarounds in October and November, and of course it's hurricane season.
I was
Which
just
could
going to mention that. And when
which
are you going
could
to bring up hurricane season?
Right. It's hurricane season, and that we'll see what happens.
Or-
Sometimes when there are, as you know, Jim, sometimes when they forecast like, oh, it's going to be a really big hurricane season, there's like no hurricanes, and
Yeah. What was the year? The year after Katrina was like that, wasn't it? We were supposed to get as many
yeah, it was.
hurricanes
I think it might have been 2 years after Katrina, but it
because I thought
was.
they were expecting the same amount, and it was almost zero.
It
But
was almost zero, right?
I do wish, I hope someone from the CME or the ICE is listening to this. I do wish we had a very active crack spread option. Just the RBOB contract against any of the crudes, WTI or Brent, and the diesel contract against I know it's listed. It just doesn't trade. They need to go visit a couple of our friends in Houston and rev this thing up, because there's just lots of plays, I think, in that market.
Oh yeah, for refiners, it would be great if that had liquidity.
One of
Uh,
one of our market maker friends said he stopped doing it because the paper just came one way. It was all refiner hedging.
right.
I don't think you'd see that now. I think you'd see, come all different kinds of directions.
I think you're right, and yeah, I think the industry could really use liquidity in that product, and it would be
So
nice if.
Andy, what's going on in China? They're a big. They're growing. They're not growing. They're dumping. They're not dumping. What are they doing?
Well, I think the market is certainly laser focused on China these days. One thing that we've seen, we've seen global inventories draw now for 4 quarters in a row, and a lot of that draw is coming out of China. Remember, China wisely bought amazing, awesome, incredible amount of crude when prices collapsed in the second quarter of last year. They bought so much crude that there was traffic in many of their ports, and they really didn't get it couldn't get it all unloaded until like fourth or first quarter of this year. Uh, the but it gave them a lot of flexibility.
Yeah.
So when prices have surged in the second quarter here, they've been able to run down inventories. They ran down inventories in the first quarter, so they haven't been as active on the buy side, and certainly as in the rest of their economy, they are they are coming down harder on the regulatory side, in terms of imports and exports. I think that the second quarter numbers are going to look a little bit soft for China, but I think second half will certainly, I think we'll see a pickup, particularly as prices are coming off. I think net, China's still going to end up, somewhere. It's not going to be 1 million barrel a day growth this year. It'll be slightly. I think it's going to be less than that. I think it's going to come in around 800,000 barrels a day, which is still pretty good.
Yeah.
For growth, because last year they had a very good year in terms of demand growth relative to the rest of the world. They actually grew a little bit last year, while the rest of the world was collapsing.
Yeah. On that point, do you have us? Do you have 2022 demand over 2019 or no?
I actually do have that.
You worked out those numbers?
Yeah, I have us up by a little over 3 million barrels a day. I think OPEC is, let's see, OPEC has 96. OPEC is over 4 million barrels a day.
So this is what over what when you say over?
This is year over year.
So, okay.
So roughly like 3 million barrels a day.
And that's from
96 and a half. I'm sorry?
Just to explain that number for me.
I'm sorry. OPEC is up 3.3 million barrels a day total demand. So let's say OPEC, they're close to 100 million barrels a day expectations for next year.
I'm sorry. Yes, the OPEC report that comes out. Got it.
Yeah.
You're right.
Yeah.
You're right. Okay, sorry.
Yeah.
Sorry.
Yeah. Now, if you look at this OPEC report, by the way, the one that came out this last Thursday,
yeah,
it was really bearish because they didn't change demand in the second half, which I don't understand. The second half of 21, but if you look at 2022 first half,
yes,
they don't give you what they think OPEC production is going to be.
Right.
But if you use let's just use the EIA numbers, because the EIA does give you what they think OPEC production is going to be. They've got builds of first quarter. That OPEC report is looking for, if you use that OPEC report is looking for a build of 3 million barrels a day in the first quarter, and then like 2 million in the second quarter. Now, you're not going to find that in the OPEC report.
No.
If you go read that and go, what is this guy talking about?
Right.
What I'm doing is just using what the EIA thinks OPEC production is going to be in the first half, and just using that number. And if you put it into all the balances, you're going to get a big build. It's bearish.
I was noticing that, and I'm glad you brought that up. But I'm not sure our listeners, once they're done with this podcast, rush to read the OPEC report. But it's still the OPEC, the IEA, and the EIA are pretty good to look at each month, just to kind of, it's almost like bouncing off your ideas with somebody else.
Now, to look at what we're looking for is about an 800,000 barrel a day build. Others have either unchanged or build. The EIA has a build of about 500,000 barrels a day. So, those are bearish, and and this is without Iran on the market. This is assuming that OPEC unwinds its deal. For OPEC Plus unwinds its deal by 400,000 barrels a day
each month,
every month,
right.
Through May. And if they did that, we're going to see big builds in the first half, and that's without Iran on them. Iran increasing production.
Are they still meeting month to month, or is it the next meeting?
No, they're still meeting month to month.
Oh, okay.
I don't think nothing's going to happen this month. I don't think.
They feel like they're in good shape. The price. So we talked about the price coming down, and where does it go from here, I guess is my question. Do we have a lot more downside, do you think?
I don't
What's
think
what's your
your
call on
term.
that?
No, I don't think so. I mean, what I think has happened to this market is because of demand expectations being lowered as much as they have been. I think the range has been lowered. You had people looking for $80 a barrel, and I think that those hopes are dashed to a certain extent. And I think the range for WTI, I think it could be like 60 to 70 or 62 to 72, something like that. Now, if the variant goes away and everything is good to go in the fourth quarter, that could change too. But that again is that's to be determined.
Right. And so it's all contingent on this. I'm thinking about we seeing more driving. We're going to see people still drive it. People go, back. It's back to school, so I think that's where you see some of that. You mentioned a lot more people going back to work. However, they might not be driving. They might be working from home.
Right.
And
Right.
so you have to adjust your models to
Right.
reflect that.
And a lot of companies, at least locally, there a lot have been talking October, but some are pushing it back to January. I think Amazon pushed it back till January. The return to offices.
Yeah, I think that's that's also a moving target. Anecdotally, I think that's people seeing a lot of pushback, and and even when they go back, it's going to be fluid, or people go in for 3 days, but maybe not. It's going to be interesting. There's a lot going on.
Yeah, and it's interesting. The other interesting thing: are they going to take mass? Are they going to take the train? I don't see why not. I think the train is fine, but are they going to drive? Yeah, we'll see. Certainly, traffic's been pretty intense this so far in the second and third quarter.
Andy, we've got an issue of climate change, or at least as I took my son to school when he was in kindergarten, and this young girl student said, "It's friggin' hot outside," and I always loved her expression, so I say it now. It's. Have you seen any? Does that show up in your numbers that it's they said it was the hottest July on record? I don't know. I mean, do you see that
Well,
showing up in
I think for natural gas,
for
it's
natural
really
gas?
has
Definitely.
showed up.
Oh,
Oh my
definitely,
goodness.
definitely.
Yeah, I
Yeah.
mean that's been, that market has been obviously very, very strong. I don't think so much, because petroleum is not a big, use that much petroleum for to generate electrical demand. So
So there's less and less diesel.
yeah, there's hardly any these days, or very, very little. So I don't think it has
Yeah.
as big of an impact. Now, certainly, we can talk about what's going to happen over the next 5 to 10 years. That's going to have a big impact. The whole notion of climate change and the transition. But we'll be talking a lot about that, Jim.
I know it's very interesting, as now you get more and more stories about the pushback of we want to get, our current government wants more EVs, but there may not be the supply chain, those metals to get to where they want to go. So it's going to be interesting to think about as we go forward. Okay.
Yeah, our government has is definitely trying to hasten the transition away from petroleum, but then at the same time they have the nerve to ask OPEC to increase production. So it's really,
Oh
you know,
yeah.
you don't know where that, and clear, OPEC wasn't going to do that. I guess that was just a theater.
Gee, I mean Yeah, I don't know. That should have been behind doors,
That should have been
behind
behind
closed
doors.
doors.
Right. That shouldn't have been.
So
If they were successful, which it was sort of a Hail Mary. OPEC is saying, and when it happened, I said they're going to just say we are increasing production.
yeah,
It's coming, right? And it's
yeah,
exactly what they said.
yeah. It's interesting. We had a couple of years where OPEC is, as a group, is highly successful in a increasing demand situation, and very unsuccessful in decreasing demand. So it's almost like, are they really driving these markets at all? It is like, say that they're increasing by 400,000 barrels a day, and I guess the market's come off, so that's a little bit, but it's also COVID in there. But yeah.
Jim, I think they've done a pretty good job of managing the market since they completely undid it last year.
Well, that's what I'm saying. Thank you. That's my point. Is they're really good after they're really bad.
Right, exactly.
That's like a Churchill line about the U.S., where we always the U.S. always does the right thing after they've done every other possible thing first.
Right.
Yeah. So, okay. So let's get back to the prices. So you're thinking kind of a range going forward, as all these, the COVID, OPEC policy. Oh, U.S. production rig counts. Does that give you any optimism that we're producing more, less than what's in these numbers, or what's your comment on that?
Well, the EIA, getting back to the EIA, is looking for production to be pretty flat. Actually, we're at 11.3. I'm looking at they're looking for 11.2 in the third quarter, at 11.26 11.26 in the third quarter, and 11.3 in the fourth quarter. We're at 11.3 right now. And then next year they have first quarter 11.5, second quarter 11.6, 11.9, and 12.1.
Okay.
Personally, I think that they're low for the second half of this year. I think Q3 is going to be closer to 11.4, and I think Q4 is going to be closer to 11.45, 11.5. So I think it's going to be higher, but frankly, I've thought it was going to be higher all year, and the U.S. producers have done a pretty good job of being disciplined and not really going for it on this rally. But we have seen the rig count has doubled, in a year. So I think the production is going to be somewhat higher. Where we are also going to see, what we are seeing growth is on NGLs. NGL production is up 600,000 barrels a day from Q2 to Q1, and then flat for the rest of the year. But next year, the EIA for 2022, Jim,
Yes.
we're looking for a 500,000 barrel a day increase on NGL production.
Jeez.
And 600 on crude. So that's a total liquids increase of 1.1 million barrels a day. That's a lot.
Yeah, I'm thinking, as you said before, there's going to be builds in the first quarter and second quarter, and if we get some kind of hiccup in demand going, towards the end of the year, maybe this virus gets in full force. That might be an interesting first quarter.
Yeah, it'll be interesting to see. Are we going to see price pressure from the back, price pressure for the front? How is that gonna work? Certainly,
Right.
the curve has come off a lot. I mean, the curve has really gotten crushed here, and I think that, again, that's part of the expectations. When you start cutting demand down that much, the curve is going to go lower. Now, I have a question for you.
Yes.
I think you had mentioned that the big open interest for options was it these 22?
Yeah, we've been talking about that since the beginning of the year, how there's like 70,000 open interest in these $2,200 calls, and it dwarfs number. Let's see, number two is the Dees 2021 75 call with 31,000, and the highest open interest put is the D's 50 put with 21,000. So, that's where a lot of it may be mainly one trader, but I don't think it's all one trader. And 4 of the top 10 open interest strikes for calls are D's 22 calls, so hundreds, 98s, that kind of thing. And it's just unusual, but that hasn't been active in a while. Volume's been kind of, I have to say, it's kind of like a summertime vacation volume. Occasionally, a couple of days over 100,000, but not big volume. And if you look at the total open interest, 1.48 million in calls and 844,000 in the puts, and that would kind of go along with, I think the numbers you were giving for the net length for funds was options adjusted, wasn't it?
Yeah.
Yeah. So whatever, if they bought call spreads, that would be if the funds bought call spreads, that would be not as bullish as if they bought calls outright, perhaps. But the bullish bearish stuff of the funds in the options market shows up in those numbers that you mentioned already. But it's just more along what we've seen for a while. People really get revved up about $100 oil, and still could happen, but
sure,
not today.
It's not. Yeah, not today.
Just a quick exercise. Let's take that going a month out. So it's August. Give you to the end of September. I think we're more likely to hit $80 or $50, or neither. Well, you don't think?
I think that's a neither. Yeah,
that's a neither. But if one had to be hit, would you have a bias on one or the other?
In the next couple of months?
Next month, say. Okay, give you 2 months.
Yeah, I guess it would still be the 80.
Still be the 80.
It would still be the 80 because we're even though you look at these stock draws and okay, it's not going to be as much as it was before. It still draws. It looks like
right.
It still draws, and you look at inventories, Jim.
Yep.
Global inventories at the end, the OECD inventories according to the IEA.
Yep.
It's 60 million below at the end of June is 60 million below the 5-year average 2015 to 2019. Let's throw out 2020. So, we're already low. If we're drawing stocks, we're going to get lower. So, we're at the end, if we draw stocks, just looking at, my own numbers, I have us 100 million below the 5-year average by the end of the year. That's not bearish.
It's not bearish. It means you don't think the market's going to crap out here.
I really don't. No.
Yeah. As we always say, all things are possible.
All things are possible. I mean, maybe the market. We'll see what happens. If let's say these talks are rescheduled, the Iran-U.S. talks. Maybe the market takes another leg down. They could be rescheduled, but nothing comes of it. Well, we'll see. Right now, I think the market is not expecting very much to come out of out of that nuclear, the U.S. getting back into the nuclear deal.
Yeah, it'll be interesting. I kind of think the administration needs I want to call it a victory in foreign policy, but something like a good outcome, and I'm not sure which it is. Is it an Iranian deal or not an Iranian deal?
Yeah, that's right.
Yeah.
That's right. But that's clearly going to be a big fundamental because Iran can quickly put out 500,000 to 1 million barrels a day onto the market, and if that's the case, let's say if that's the case, then a lot of these. A lot of the draw, there'll be no draw. Things will be flat to maybe build. And then we talked about the first half build. So OPEC's going to have a lot of work to do.
Yes. Just wrapping it up. So we're going to look at this Iran, continue to kind of focus on whether this Iran deal gets done. Focus, obviously, we mentioned COVID, the Delta variant, any other variants that come along. And what always OPEC policy, or
OPEC policy,
that's pretty
China,
stable though, don't you think,
right?
for a while now?
The OPEC policy, yeah.
I mean, they're
Yeah,
gonna like where they are, I think. And then
I
what?
think they're, yeah, I think they're okay here.
And what else will we look at?
Well, China, I mean,
China.
the China, and certainly if we're looking at the the stats, we'll see how demand plays out here in the third quarter. We'll see where August gasoline demand. The other thing that I didn't mention, diesel demand is sort of plateauing.
Yes.
And I think that's a function of people on vacation. There doesn't seem to be the demand for goods.
Well,
the retail demand for goods may have waned some. Retail sales were down today.
I actually have a couple of packages from my neighbors because they're on vacation. So
yeah, but
just,
not. But I think
not
people.
as much.
The big point is people are spending money on that rather than goods over the last couple of months. We'll see if they come back, and of course the supply chains are all messed up. But diesel demand is as I said, it's plateauing here some, and let's see how. And that too is a story of a global economy and the supply chain. So we'll see how that that plays out.
I think retail sales were down today, weren't they?
Yeah. That's what I was saying. They were down, I think 1.1%.
1.1.
Yeah.
You want to wrap it up, Andy?
Yeah, let's just for some final comments, not necessarily on the market, but we just did a podcast with Amy Jaffe, because I know we talked about the energy transition today, and Amy's written a new book called Energy's Digital Future. It's excellent, and we did a podcast with Amy, which we are going to post very shortly. So I urge everybody to listen to that. And you can find me at Lebow at commodityresearchgroup.com, and I'm on LinkedIn. You can find me on LinkedIn. Jim?
Yeah, you can continue to connect with me on LinkedIn. I say yes to everybody. So, okay, Andy, thank you very much. We'll see you in a month.
Okay.